Good morning, everyone. I think we have quorum present. I'd like to call this meeting to order. Welcome to the 13th meeting of the Audit Committee. I want to begin by acknowledging that we are meeting today on the traditional territory of the Mississaugas of New Credit First Nation, the Haudenosaunee, the Huron-Wendat, and home to many diverse Indigenous people. Are there any declarations of interest? Please indicate the item number and the nature of the interest. Before we continue, I'm just going to take a quick moment with the indulgence of the committee just to recognize that we're here at our last Audit Committee meeting, and I wanted to say, of course, welcome to the newest member, Councillor Davis. And I also wanted to... Perhaps after. I also wanted to take a moment to say thank you to a few people in the room. And if I can just begin by saying thank you to Chin Lee, who's not here, who was our chair for the first half of the term. And it was under his leadership that we were able to get through a number of very difficult files. I'd also like to thank my vice chair, Councillor Carmichael Greb, for her help with this committee. I must thank the Auditor General, Beverly Romeo Beeler, for some amazing work throughout the year. And I want to make sure that I recognize all of the audit team, who I see there's a number in the audience. There's too many of you to name all at once, but I would definitely want to make sure I make a shout out to Aina Chan, to Jane Ying, to Syed Ali, and Elaine Au, some of the managers and directors and assistant auditors that I've worked with throughout the term. And I wanted to say thank you for your diligence and your care. The work that you do is amazing. The work that you do is really what changes the public service before us. And as I said it before, it creates that license for management to go out and create change and transformation. We have a Chief Transformation Officer that I know Councillor Carmichael Greb works extensively with. But some of the work in the audits and some of the findings are what lays the groundwork to make these massive changes. You know, and I just want to take a quick second to talk about some of the phenomenal files. You know, who could forget the report on body rub parlors and holistic health, on nightclubs, some of the work that we did on IT technology and security, real estate, building permits. Who also could forget the reports on Toronto Parking Authority, the employee benefits for health and dental, disability benefits. Who could forget pavement contracts, the TTC, and water billing? These are just some of the highlights running through a quick list that stand out of my mind, but there's countless others. And I can only imagine the agony and ecstasy on working on some of those files, some of the agony of going through some of the nitty-gritty details, you know, things like body rub parlors and holistic health and some of the research that you had to do to make that report come forward. And of course, the ecstasy of seeing some of those recommendations and changes coming forth. The one comment I would make is I hope you don't gauge the importance of your work on the amount of discussion or play that happens here at the committee or at council or even in the media. There's so much more to what you've done. And sometimes we just don't have a chance to talk about all the things at once. So I really do thank you for this work, and I know that you are starting to see some of the fruits of your labor. And, you know, we really have a stronger and better government, and something that the citizens of Toronto are more confident in because of the work that you do. I also, of course, say thank you to the management team who are here, and they come and go in various capacities for the files, but we know how much work that you do and how seriously you take the work of the Auditor General and her team. And I thank you for all of the effort you've put in over the last 4 years. With that, I would also like to thank our clerk staff, who does amazing things. You know, the clerks are here for the period of the meeting, and it you know, maybe from where you're sitting looks easy. It's not. And I can tell you there's an enormous amount of work done by the clerk staff, by Rosemary and Margaret, to make this meeting a realization. It's hours and hours of preparation and making sure that things are ready and just right. So I really am indebted, and I'm sure the committee members feel the same way. With that, I'd like to carry on with the meeting, and I thank you. So I'll now take a motion to confirm the minutes from May 11, 2018. Councillor Matlow. All of those in favor? And that is carried. We can now go through the items. One thing I will state up front, committee members, I know that you know that item number 11 on the fire safety is probably an item that's going to take some discussion, and I'm going to propose up front that we reorder that to the end of the meeting, as I realize that there may be some questions that may need to go into camera. And so for efficiency, with your indulgence, I'd like to order that way so that we can get people out of the room once their items have been dealt with and focus in on that particular item. I also ask committee members that there are a number of financial statements which are attached to the items. If you wanted to make a hold on one of these items, if you could identify the specific financial statement, that way we can let the others that are here to speak to those other statements also leave once that item has been dealt with the caveat that this committee reserves the right to go back into one of the other statements, and if you can just monitor the meeting from where you are to make sure that if the question does arise that you are here to help support answers to that question. So the first item I have is AU 13.1, the City of Toronto 2017 Audited Consolidated Financial Statements. I'm going to hold that. Questions on that matter?
Yes, I'll hold that.
Councillor Hart. Okay. AU 13.14, Information Technology, Infrastructure and Asset Management Review, Phase 2, Establishing Processes for Improved Due Diligence, Monitoring and Reporting for Effective IT Projects and Asset Management. Are there any questions on that item?
Yes.
Councillor Hart. AU 13.15, review of Toronto Transit Commission employee expenses and reward and recognition program, opportunities to improve policies and controls and save costs. Are there any questions on that item? Seeing none, would a committee member wish to move that? Councillor Matlow. All those in favor? And that is carried. AU 13.16, Toronto Transit Commission, managing telecommunication contracts and payments. Are there any questions? Councillor Ford wishes to hold that. AU 13.17, improvement needed in managing the city's wireless telecommunication contracts. Any questions on that item? Councillor Hart. AU 13.18, Auditor General's 2018 status report on outstanding audit recommendations, city divisions in Cluster B. Any questions? Councillor Davis?
Move adoption.
Councillor Davis is moving adoption. All those in favor? That is carried. AU 13.19, Auditor General's 2018 status report on outstanding audit recommendations for city agencies and corporations. Are there any questions? Councillor Matlow. AU 13.20, Auditor General's Office report on the results of applying specified auditing procedures to financial information other than financial statements for the year ended December 31st, 2017. Are there any questions?
Yes, just a quick one. I'll hold that very quick.
Councillor Hart. AU 13.21, Auditor General's Office External Peer Review 2018. Are there any questions? May I have a motion for adoption? Councillor Carmichael Greb. All those in favor? And that is carried. All right. We are back to the top of the order paper for AU 13.1, City of Toronto 2017 audited consolidated financial statements. And I think we have Mike St. Amant and Sandra Calfretti here to make a presentation. Welcome, and the floor is yours.
Thank you. Good morning, Chair and members of the Audit Committee. Thank you for allowing Sandra Calfretti and I to present the City's 2017 consolidated financial statements. Joining us today from PwC are Michael Houghton and Kathy Russell, the engagement partners for the City, as well as Zuruj Vora, Senior Manager, and Omar Shafiq, a Manager. The staff report that accompanies the statements provides details and highlights on the statements and helps give us some meanings to the numbers. For our presentation, we will provide an outline of the 2017 consolidated statements, talk a little bit about the difference between accounting and budgeting, give you highlights of the 2017 financials, talk to you about what's up and coming in the public sector accounting world, and provide a few concluding remarks before we answer your questions. There are 4 individual statements in the City's consolidated financial statements. Each statement provides information about the City's financial position, its assets, liabilities, revenues, and expenses, essentially the nature and extent of the financial affairs of the City. The statements are prepared using the accrual basis of accounting. We will provide more information on the differences between City accounting and budgeting later in the presentation. Supporting these 4 statements are explanatory notes referenced in each individual statement that provide expanded disclosure and explanation of the reported amounts. The City's financial position cannot be fully understood without reading the accompanying notes to the financial statements. There are 123 entities directly captured or consolidated into the City's financial statements, which is the same as last year. The consolidated statements reflect the combined assets, liabilities, revenues, and expenses of the operating, capital, and reserve funds of the City and all of its agencies and corporations. The statements also capture the City's investments in government business enterprises, or GBEs, but not on a line-by-line basis. GBEs are shown as investments on the City's financial statements. They are self-supporting business enterprises controlled by the City, and each of these organizations and GBEs prepare their own financial statements, which are presented separately to Council and Committee. Agencies and corporations, arenas and community centers, and the business improvement areas are listed on page 9 and 10 of the consolidated financial statements and in Appendix A of our report. It is always appropriate at this time to remind the committee of the roles and responsibilities of management and the auditors. Management is responsible for preparing the financial statements in accordance with generally accepted accounting principles, GAAP, established by the Public Sector Accounting Board, and for maintaining sound financial and internal control systems designed to ensure the proper recording, control, and oversight of the city's financial activities. The city's external auditors, PricewaterhouseCoopers, audit the statements in accordance with generally accepted auditing standards. They review and evaluate the city's control and financial systems, and they provide an independent opinion as to whether the financial statements present fairly in all material respects the city's financial activities. Before we present the significant financial highlights, we would like to explain the difference between the way municipalities budget and how they must prepare and present their annual financial statements. This should clarify why the annual accounting surplus reported in the city's financial statements differs from the operating budget surplus reported in the year-end operating variance report. The financial statements are prepared in accordance with GAAP as set by CPA Canada's Public Sector Accounting Board. The statements include the combined activities of the operating capital reserve and reserve funds, and rather than expensing the purchase of major capital assets, tangible capital assets are capitalized under GAAP. In the annual budget, separate budgets are created for operating and capital with contributions and draws from reserves and reserve funds budgeted in both. The city, like all municipalities, budgets and levies taxes based on its cash requirements, and therefore budgets for debt servicing costs, including principal repayments, but does not budget for amortization or increases in actuarial costs. Costs for tangible capital assets are budgeted as expenditures as the assets are acquired or built. The financial statement surplus is based on a full accrual basis. It represents the consolidated results of 123 entities, as outlined earlier. It includes tax and rate-supported programs and includes the combined activities of the operating, capital, and reserve funds. The annual budget surplus is based on a cash requirements basis. Each entity follows a budget development and approval process approved by council. The city's operating surplus reflects the city's surplus for funded items, but excludes tax, water, and solid waste, which are reported separately, and agencies and corporations surpluses are reflected only for the portion of the surplus returned to the city that is funded items. Essentially, on the financial statement side, the annual surplus includes expenses which do not require cash outlays, such as amortization for tangible capital assets and changes in liabilities for future employment benefits, landfill closure costs, and insurance requirements. On the budget side, the annual surplus is based on cash requirements for operating expenditures and debt repayments and follows accrual accounting for most matters, but not for debt or actuarial liabilities. I'd now like to turn the presentation over to Sandra Calafreddi, the Director of Accounting Services.
Good morning, everyone, and thank you, Mike. We'd now like to take you through some highlights of the 2017 financial statements. Our staff report does provide details on the category makeup and changes with respect to a number of major account categories. But in this presentation, we would just like to highlight a few major items for you. We've also provided details as appendices in this presentation if you wish to look there for further information. So, as Mike indicated, one of the statements within the financial statements is a statement of financial position. At December 31st, 2017, the city had financial assets of $10 billion. 41% of those assets are investments, which are mostly reserve and reserve funds that are committed for future use. 2.4 million or 20 billion or 24% is our investment in government business entities. And the other financial assets consist of cash, accounts receivable, and taxes receivable. Liabilities total $17.1 billion. Accounts payable is $3.4 billion, 2/3 of which are trade payables. Deferred revenue is $2.8 billion, and those are revenues which are received but are set aside for specific purposes, either by legislation or agreement. So examples of those would be development charges, or transit funds. $6.3 billion is the long-term, net long-term debt and mortgages of the cities and its ABCs. Employee benefit liabilities are $3.9 billion, and then there's other liabilities of $746 million, which are things like landfill and environmental liabilities and TTC accident claims. So net debt for the city on a consolidated basis is $7.1 billion, which is essentially liability, the excess of liabilities over financial assets. So net debt is actually an important measure for the city and all governments because it's the amount that needs to be financed from future revenues, and therefore it always should be maintained at a sustainable level. Net debt in 2017 increased by $613 million, which is largely due to our continued investment in capital assets. The city's non-financial assets at the end of 2017 total $30.8 billion, the majority of which, $30.4 billion, is equal to the city's investment in tangible capital assets. And finally, the accumulated accounting surplus for the city at the end of 2017 is $23.7 billion. So I'll just go over a few significant amounts. The city's net long-term debt and mortgages actually increased this year by about $900 million. The city issued $1.3 billion in debt this year and had repayments of $424 million. And that included sinking fund earnings of about $58 million. In terms of the employee benefits liabilities, these actually represent amounts payable to employees or third parties in future years for services provided by employees in current and prior years. These amounts consist of workers' compensation, long-term disability, health benefits for early retirees, and benefits for other retirees covered under the city's legacy pension plans. The employee benefit liabilities increased by $215 million, or 6%, in 2017. The majority of this cost is post-retirement LTD. Net debt is, as indicated earlier, is the excess of liabilities over financial assets. In 2017, the value increased by $600 million to $2.71 billion, or 9.4%. The majority of this increase is primarily due to the city's financing of tangible capital assets, offset by the city's considerable accounting surplus in 2017 of $1.2 billion. Non-financial assets represent the value of the city's tangible capital assets, which are used in the delivery of city services. In 2017, the city invested $3 billion in tangible capital assets, $1.4 billion of which was invested in building and building improvements. Amortization offsets the tangible capital asset value by $1.1 billion in 2017. I'll now quickly take you through the statement of operations and accumulated surplus. So this statement is actually the municipal equivalent of the private sector statement of income and retained earnings. For 2017, on a consolidated basis, the city had total revenues of $12.6 billion, which consisted mainly of property taxes, user charges, and funding transfers from other governments. Expenses incurred were $11.3 billion, which were mostly related to the protection of persons and property, transportation, social and family services, and recreational and cultural services. So this leaves an accounting surplus for 2017 of $1.2 billion. Now there's a couple of things that should be noted. There was a significant shortfall in actual versus budgeted revenues occurring in funding transfers from other governments of $566 million. This is due to delays in approved signing agreements for PTIF funding, for PTIF projects, and lower than budgeted spending, which essentially reduces their recovery, related to Union Station revitalization projects and the Toronto-York Spadina subway extension project. So just to provide you some information on the reconciliation between the budget surplus and the accounting surplus for the year. The budget surplus for 2017, as reported to Council in late June and adopted by Council in late June, was $261 million. In order to reconcile back to the accounting surplus, we've added back $36 million in reserve and reserve funds, which actually flowed through the city's operating budget, but for the financial statements are considered deferred revenues. Then there's a number of non-cash add-backs, such as the ABC operating items and increases to the city's GBE investments. We've also added back PSAB adjustments, such as accrued vacation and lieu time, as well as other adjustments required by accounting standards, which would include things like net changes to tangible capital assets, which would include amortization. So the accounting surplus for the year is $1.2 billion. And it should be noted that this is actually not a cash surplus because it includes non-financial assets, which is largely our net investments in capital and infrastructure assets, which can't be sold to generate money for other purposes. So the makeup of our accumulated surplus, as indicated earlier, is primarily our investment in tangible capital assets of $30.4 billion. So a number of tangible capital assets, there are details in our staff report and in the financial notes to the financial statements. But as an example, the city has $13.2 billion invested in land, buildings, building improvements, machinery, equipment, and vehicles, and $12.9 billion invested in water and water main, linear assets, roads, and transit. Another component of the accumulated surplus is the fund balances, which is the operating capital and reserve funds that total approximately $4 billion. The accumulated surplus is actually reduced by amounts to be recovered from future revenues. So these would include things like mortgages, net long-term debt, and the employee benefits, details that we just provided to you a little earlier. That reduction this year is $10.7 billion, which increased $948 million from 2017. So it needs to be noted that although the accumulated surplus is high, as you can see, the majority of the makeup is the city's non-financial tangible capital assets, which do not provide liquidity to the city, nor are they available for sale because they are required to perform city services. So there's been a number of new standards that will be coming forward from PSAB in 2018 and future years. Over the next few years, accounting services staff, under the direction and guidance of the treasurer, will conduct research and work with our external auditors to determine which of these new standards actually impact our financial statements. It should be noted that standards only impact material items, so in some cases there will not be a material change to the financial statements as a result of this standard. In addition, in 2018, accounting services will participate in the task force on climate-related financial disclosures, which is a CPA Canada initiative in partnership with Natural Resources Canada that will actually look at climate-related information that's available from cities to determine how this information can be leveraged for decision-making and what financial statement disclosure will be required related to this information. This is an important initiative for Toronto because the ability for municipalities to be resilient continues to draw attention. And I'll turn it over to Mike now for concluding comments.
Thank you, Sandra. In conclusion, we have statements before you with a clean audit opinion, and there are fewer control points than last year, though two, segregation of duties and the financial close process, are still there. Both have been discussed with PwC, and we are working on incremental changes to both. The consolidated financial statements provide comprehensive information on the city's financial performance during 2017 and its financial condition at the end of the year. The city's finances support its good credit rating. However, during the year, the city's net debt increased $613 million, and slide 24 shows that it has increased an average of 11.8% per year over the last 4 years. There has been considerable discussion about the city's long-term financial direction, which will not be discussed as part of these financial statements, other than to advise that these financial statements are based on historical data as at December 31st, 2017, and for the period then ended. Our key challenges include maintaining our significant assets, infrastructure in a state of good repair, investing in priority services and infrastructure as the city grows, and funding our operations from existing sources of revenue. And these financial statements do show that we have invested in tangible capital assets and have borrowed money for those purposes. On a closing note, I'm proud to advise that the city, for the 11th year in a row, has received the prestigious GFOA Award for Financial Reporting for its 2016 financial statements, and we certainly intend to receive that award again for these financial statements. I want to thank and acknowledge the outstanding work and commitment of the accounting services team in preparing the city's consolidated financial statements and annual financial report, particularly Sandra Calafretti, the Director of Accounting Services, Shirose Murgy, the Manager of Financial Reporting, Stella So, Acting Manager of General Ledger and Accounts Receivable, as well as Manel Daniel, Chris Phillips, Jennifer Kim, and the rest of the accounting team, some of whom are with us here today. They all played a key role in preparing these statements, and that concludes our presentation. We're willing to take any questions.
Thank you. And before we move forward, just a couple of quick housekeeping items. AU 13.9 is being held by Councillor Hart. I just want to acknowledge that the order paper does mention that there's a presentation on that, and I think we missed that I missed stating that during the rundown, but I want to make sure that the staff are aware that that time has been set, available to them if they wanted to make that presentation. And the second was, I recognize that there's probably a lot of people in the room waiting for item number 11. Given the number of items that are on the agenda, including some presentations, I think it's a safe bet that it's going to be at least an hour before we get to that, so about 11:15, if not longer. So if you did need to drift out of the room, be mindful that we won't be getting to that item for some amount of time. With that, I also wanted to acknowledge that Kathy Russell and Michael Houghton are here from PwC, who are the auditors that worked on this. They're just over there. I would just offer the floor if there's any comments that you wish to make that you don't have an opportunity to make otherwise. If not, you're here for questions as well, which we'll get to in a moment.
Thank you, Mr. Chair. If it would please the committee, if I can have 2 minutes of the time of the committee to provide a brief overview of the audit.
Thank you.
I will assume our report's been pre-read, so just a few of the highlights, and Mike and Sandra did go through some of the details of the financial statements. In terms of the audit and the status, we are substantially done. There are a few open items that we have. Those are typical items that we would leave open at this point in time because we save those for when council approves the financial statements in the coming weeks. Our report does highlight significant audit accounting matters as required by our professional standards. We've also included required communications, also as required by our professional standards around independence, any unadjusted or adjusted items arising from the audit, internal control recommendations, as Mike's pointed out, and a few other, I'll say, more standard communications. We also have itemized in our report a section around fraud risk. As auditors, we are required to design and execute procedures to address the potential risk of material misstatement in the financial statements due to fraud. We have completed those procedures, including a review of whistleblower hotline, discussions with senior staff, have no matters to report. We have itemized in our report that if any of the committee members have anything on that topic area, they're to reach out to both Kathy and I directly at some point following this meeting. Mr. Chair, that's my summary comments. Again, happy to take any other comments or questions the committee may have on the audit itself.
Thank you very much. With that, I have Councillor Matlow for questions.
Thank you. Actually, this may be a question for PwC. I forget which month it is now, but a while back, I requested to council and to this committee that there should be a value for money audit done with respect to the consideration between the 7-stop LRT proposal and the 1-stop subway proposal in Scarborough. And the Auditor General, along with council, took no action at that time. There's a master agreement remaining in place for the city to receive the 7-stop LRT with funding provided by the province, both capital and an ongoing operating. Council decided to increase our debt by $1 billion and property taxes to support the the one-stop subway. In your professional opinion, would it be, politics aside, but just objectively, would it be wise in those cases to review and analyze with a value for money audit those options in front of us to understand, are we getting the best bang for each buck, and are we providing the most service for every dollar spent?
So just to respond, initially, a value for money audit would not be under the mandate of an external audit, but certainly PwC does perform value for money audits in the public sector. Our internal audit group in particular, under PwC's banner, performs those audits regularly in the public sector. If it pleases the committee, we would be pleased to do that. There are a lot of mandates like that in play right now. And I understand your perspective, and it might be valuable to the committee. Well,
very, very diplomatically responded to. I appreciate that. Is it common, just from your professional experience, for various orders of government to request those types of audits when they're considering major capital projects?
I'm not sure in the particular instance of major capital projects, but it is common for auditor generals and other management and other committees in the public sector to request those types of audits. So. You tiptoed through that one very, very well, and I appreciate your perspective. The to our staff, to our audit, to our EG staff. You mentioned earlier that there has been a $613 million increase in our net debt. Could you remind me, what was the number? I fail to remember the number that you said each year for the past 4 years.
Do you mean the 11.5%?
So there's been 11.5% increase each year on average?
No, cumulatively.
Cumulatively, yeah, okay. That's right, okay.
There has been a larger amount of tangible capital assets purchased in each of those years as well.
Right.
So that we don't look at one number in isolation and determine
you bring it all together.
How well we're doing.
And would it be fair to say that what's keeping us afloat is the revenue from the LTT?
Certainly revenue from MLTT has helped. It's not a panacea, and it has helped with incremental changes, but it's at $800 million, it is still a fraction of the total revenue of the city.
So is $613 million a reasonable and healthy amount to have seen that type of increase? Or is it irresponsible, or is it, how would you characterize it?
I would characterize it as a reflection of addressing state of good repair and build out of assets. Certainly, that's why we have a long-term financial plan that is coming to the city to put all of these in perspective. I believe we're better off now than we have been, and we're continuing on a good.
Where I'm going with this is that, the LTT has been described as an unpredictable and unreliable revenue stream. We have essentially fixed in property tax revenue at around inflation. And that conversation that we were to have had a few years ago about the so-called adult conversation about revenue tools has been sort of shifted off the table by both our municipal and now our new provincial government. So I just kind of wonder, if we continue to increase our debt load, are we going to be in a position eventually to jeopardize our ability to service it successfully, or be able to address other capital priorities if we don't have any sort of known way to pay for it?
Last question.
Through the chair, perhaps I could respond to that question. We are taking forward a report to executive committee at the next meeting that will speak to the operating variance with respect to MLTT. We've been tracking that on a weekly basis, and our findings are that MLTT is actually meeting budget. In fact, it's exceeding budget.
Yes.
There's no question that it has a different risk profile than other revenue sources, and we are somewhat exposed to MLTT. The previous city manager has highlighted that for council. Notwithstanding that, we think that we have a very robust revenue base to deal with future requirements, both capital and operating, and we will be coming back in Q1 of 2019 to address the long-term fiscal implications associated with council's objectives. Council has indicated that it wishes to embark on a capital expansion program related to transit, related to affordable housing, and we're identifying revenue options that would be available to council to meet those objectives.
Thank you. Thank you. Councillor Hart.
So my first question will be to PwC. You mentioned in your brief presentation that one of your functions is to look at internal controls and make recommendations. I notice in Appendix C you have 2 recommendations this year, but they're recommendations that you've brought forward in the past. So you're reiterating them. Is it unusual not to find any new recommendations?
I wouldn't say it's unusual to not find any new recommendations, and I would maybe add the comment that as part of the audit, we're not required to test every internal control that's outstanding or that the city has in place. We as auditors are using professional judgment to design an audit approach where we deem it most efficient and effective to do so. Based on that testing, we've identified those 2 recommendations consistent with the prior year.
A couple questions for staff. On page 12, you have a chart at the top of page 12 that compares Toronto amongst 6 cities in Canada and talks about key financial indicators. I'm not clear on that chart whether Toronto compares favorably or not. Can you tell me overall how Toronto compares based on the findings in that chart?
Certainly, we have done this chart for the last number of years. If we compare ourselves to Montreal, we always compare favorably. If we compare ourselves to the cities in Alberta, which have access to more sources of revenue and have more robust GBEs, we compare not as favorably. It's and to the extent that we are more than twice the size of any of these municipalities, it is a tough comparison. Certainly, we compare ourselves to ourselves year over year, and we do participate in the benchmarking initiative that's MBN Canada now, and we typically compare fairly well on most measures.
This question isn't for you, Mike, I don't think, but on page 18, there's a chart there that talks about WSIB and increasing, in my calculation, about 47%. The cost is escalating over the last 5 years. Just generally, what are we doing about that cost escalation? I don't think that's your question.
Well, I believe most of that escalation has to do with firefighter claims that the province has added over the last few years, so that certainly you can't do much over something that deals with past employees and adding past factors. That is by a large factor the biggest increase.
Yeah, I think that explains a chunk of the increase. I'm just wondering, with regard to the balance, what we're doing to address the balance. I understand the cancers and related to fire. I get that piece of it. Just wondering the remainder of it, what we're doing to drive those costs down.
And I know we have actions under long-term disability
I know it's not your question
and others.
Necessarily. Yeah. Maybe just a question for another day. Okay, thank you.
Thank you. Councillor Davis.
I just wanted to ask a couple questions. One about the funding from other levels of government. Why have we not been able to sign agreements? Which agreements have not been signed for PTIF?
Through the chair, the PTIF agreement has been signed,
okay,
but because it was signed in 2018, monies that were spent in 2016 and 2017 could not be recorded in these financial statements as recoverable because there are specific parameters around the form of how government transfers are done that they will be recorded this year. And actually, the claims themselves are being put in this year for recovery.
Is there any risk that we won't get those funds?
There is not risk that we won't get those funds. Certainly, we have told everyone of our displeasure of spending first and collecting later.
But that funding will come?
Yes.
All right. And is there provincial funding that we had expected, we had budgeted, that's going to affect our overall position significantly?
It's actually, that would be more of a budget-related question. I'm more responsible for the actuals.
Through the chair, it's really early to speculate as to the implications of provincial announcements on city budgets. We are undertaking a review. There will likely be certain implications. We've budgeted for provincial funding, and with the new government, that provincial funding may be compromised, but it's really early to speculate as to the quantum of the amount.
Okay. I mean, we are budgeting to receive funding for housing and other funds that have come from the cap and trade revenue stream. I presume we know what those impacts are.
We do know what we have budgeted for in terms of provincial funding. We just don't know the details of the cap and trade as well as the specific provincial announcements. We're engaging our counterparts at Queen's Park. We will have an answer for you in the upcoming weeks and days.
How much have we budgeted for?
We've budgeted an amount in TCHC housing, for example. I believe it's $179 million in capital funding. We have some GHG amounts in the environment and office budget. I believe it's about $60 million. And there may be others. I can't give you a definitive amount today, Councillor.
So hundreds of millions of dollars.
That could potentially be at risk.
Okay. The one thing I wanted to ask about the long-term fiscal plan, and we can ask questions because it's on our sheets and it's in your report. You said we're going to have to sort of face the future, those are my words, based on existing sources of revenue. So is it your assumption that we will not see any new additional types of revenue in the future?
Through the chair, we've been mandated by council to come forward with a report on the long-term fiscal plan in Q1 of 2019. That exercise will involve a review of our revenue options, both under CODA as well as certain other revenue options that we might want to seek legislative and regulatory approvals for through Queen's Park. As you know, under CODA, we have very limited options available to us. Vehicle registration tax may be one. There are others that involve certain parking levies, if you will. Road tolls do require regulatory changes. And so we'll be coming forward with a menu of options for council's consideration.
Okay. The debt ceiling policy. Maybe I want to ask the external auditors, have you got experience with other municipalities and what their debt financing ceiling is? I know the provincial cap is 25%, and we used to be at 13. I don't know where we are now. Where are we now at our debt servicing?
Last question.
The provincial cap is 25% of own source revenues. Ours is actually based on a percentage of tax revenues, and we use 15%.
I just wondered where we are now.
We are right around an average of 15%.
So the debt ceiling question for me is, where is this? Where do you believe the ceiling could go, and still manage the risk and costs associated with that debt financing, in comparison to other municipalities?
The province set an upper limit for other municipalities without regard to how that would affect credit ratings or anything else. The debt ceiling, just like anything else, has to be looked at as a bundle of things in terms of other revenues that we're getting, what we're investing in, what the determination is as to the service levels we're providing, so that it isn't something that's a standalone number that's a best practice.
Okay, but it will be looked at as part of the long-term fiscal plan?
Yes, through the chair. That is certainly a consideration. We're going to look at not only our debt limits, but also our reserve funds and the status of the reserve funds to meet future obligations. And as the treasurer indicated, certainly one of the key metrics is the debt guideline, which is 15%. But really, at the crux of it is how we pay for our debt. We have to have a way of funding that debt service. And so really the issue is to what extent council wishes to utilize future revenues to service that debt. It's not so much the ceiling that's of concern, it's our ability to fund the debt.
Stormwater charge, is that coming back?
Yes, council's directed us to report back in 2019.
Okay. All right, Councillor Davis, we're over time. Are you done the questions, or did you want to?
I'm finished.
Okay, thank you. Are there any other committee members wishing to question? No. Would anyone like to speak to this item? Councillor Hart, you want to speak?
Just very briefly. My recollection of the financial statements, I could be wrong on this, but as I recollect back maybe a few years ago, the financial statements would come to a separate meeting of the audit committee. I mean, these are very, very dense documents and a real tough read, a challenging read, and putting them with all of the other large reports, I'm not sure they're given as much attention as maybe they should. So I would recommend, I'm not making a formal recommendation, but I would suggest that next year, when you go through the same process, I would have a separate meeting just for the financial statements, given their importance and given that they're a tough read. I mean, on page 3 of the financial statements, it talks about plain language. But I can assure you, for 99.9% of the population, this isn't plain language. So it's a tough read, and that would be my recommendation, just something to take away. That's my only comment.
Thank you. Yes, I will move that the committee adopt the report. All those in favor? That is carried. AU 13.2, Sinking Funds 2017 Audited Financial Statements. Councillor Hart, you'd held that.
That's just a very quick question. It's not actually related to the sinking funds directly, other than the client letter at the back, which is in draft form. I can't recollect, but has this been normal practice to have letters in draft form? I see it throughout for many of the financial statements that the letter is still draft at this point in the year. Has that been past practice or not? That's my question. I just
Through the chair, that letter is required to be signed as of the date that the statements are approved, which is when council approves them. And it will be draft, and I will actually be running around when council approves this, getting those signatures, because the auditors actually will work right up to the minute council approves on subsequent events.
Okay, are there further questions or anyone desiring to speak? If not, I'd like to move that we adopt the report recommendation. All those in favor? That is carried. Okay, I think we are on to AU 13.9. And that is the enhanced focus on lease administration of city-owned properties. And my notes have it that I have a presentation from the auditor, from Ina Chan.
I'd like to introduce Ina Chan, who is the Assistant Auditor General, and Nero Moshevich. She is a Senior Auditor. I'm sorry, a Senior Auditor Manager.
Good morning, Mr. Chair, members of Audit Committee. Before you, you have our report, Enhanced Focus on Lease Administration of City-Owned Properties. With me is the project lead, Nira Movchevich, as well as our team members are with us, Sean Sow, Cindy Lee, and Sabo Mohammed. In our presentation, we will be providing you with an Sorry, apologies, technical glitch. Okay, so in our presentation, we'll provide you an overview of the background, audit objectives and scope, key audit findings, and conclusions. At the end of our presentation, management will be providing an overview of actions being taken with respect to the consolidation of leasing functions under the centralized service delivery model. So just as background, there are over 1,000 occupancy agreements on city-owned property. These arrangements include commercial leases, licenses, construction agreements, and below-market rent or community space tenancies. From these, the city generates over $50 million in leasing revenues from rents and recoveries annually. Historically, day-to-day management of leases has resided with multiple divisions, with real estate services being responsible for the large majority of leases and parks, forestry, and recreation responsible for over 10%. As the city moves forward with its centralized service delivery model for real estate, it's expected that leasing activities across the city will be consolidated. We recognize that under the transformation, policy will evolve and current processes that we reviewed as part of our audit will likely change. Our audit findings and recommendations should be considered as the city moves forward under the new centralized model. This audit was initiated as a result of the Union Station leasing audit we completed in 2017, as well as several other audits where we had identified that the city was not fully recovering its cost on properties that were leased out. As you may recall from our Union Station leasing audit, the city had not completed annual year-end reconciliations of operating costs and billed and collected any remaining amounts owing by anchor tenants for several years. So as a result of that, we added to our 2017 work plan a broader audit of leasing across the city. In this audit, we wanted to answer the questions of whether leasing revenues were being maximized, or in the case of community space tenancies, was the city cost neutral? We also wanted to answer, are rents and operating cost recoveries being billed and collected on a timely manner, and is there compliance with agreements? Our audit focused on leases managed by Real Estate Services and the Parks, Forestry, and Recreation Division, who are responsible for the large majority of leases. Our findings and conclusions are based on information available at the time of our audit was completed. However, in some cases, management couldn't locate information we requested, or staff turnover in the last several years has limited management's ability to answer our questions. So the deficiencies in lease administration practices we observed during this audit are not new. In 2006, the Auditor General conducted a review of the administration of leases on city-owned property, and the recommendations from that report, although they have been addressed, they were addressed in large part by 2009, we found that similar issues were coming up again during this audit. Management agrees that going forward, there is a need to ensure actions taken to address recommendations from this report, including policy and procedure and process improvements, need to be continued to be monitored, followed up, and reevaluated as the business matures and changes. So there's three main themes of our audit that highlight the need for an enhanced focus on lease administration. First, the need for effective monitoring and oversight to ensure lease revenues are maximized. Second, the need for action to address billing and collections of additional rents and recoveries. And then in addition, the report also highlights actions that should be considered and taken as the city moves forward with consolidating leasing function. So our project lead, Nira Movchevich, will take you through the detail of the summary of findings and recommendations.
In leasing out city-owned properties, one of Real Estate Services' key objectives is to maximize lease revenues. In addition, Parks, Forestry, and Recreation also considers program objectives that enhance the park experience for visitors. To ensure revenue is maximized, city leases should be at market rates. In nearly half of the commercial lease agreements we reviewed, there was insufficient documentation to substantiate that negotiated rents reflect market rates. These records would include appraisals, market comparisons, and financial analyses. We did, however, note that better record retention was noted in recent agreements. We appreciate that there are circumstances where program objectives are prioritized when granting leases and licenses. Some leases include requirements for the tenant to complete capital improvements. Management advised that these investments are considered when negotiating rent. We noted that the city did not ensure that all of these capital improvements were received in full. The city did not receive $2.5 million in committed improvements, and there wasn't sufficient documentation to verify that other improvements were fully received. Better tracking and monitoring controls should be implemented to ensure that the city is satisfied with the timing, quality, the nature, and value of any such capital improvements. This can ensure that the city maximizes the rent and in-kind commitments it receives in accordance with its lease agreements. The city also enters into many long-term agreements. While the rents set out in these agreements reflect market rate when the agreement was signed, as we all know, market rates do change over time. We noted that staff did not always perform the required rent adjustments and market reviews. We also found that expired leases were not renewed on a timely basis. We estimated that over $900,000 in additional revenues could have been generated had the expired leases been promptly renewed. Our estimate is based on inflation using the CPI. Even where lease agreements allowed the city to charge higher rates when a lease expired, they were not always charged to tenants. In one agreement, the city could have charged $158,000 per year, which is doubled the rate the city actually billed. This agreement has expired for over 4 years. Over these 4 years, the city could have charged an additional $341,000. The audit recommendations in Section A of the audit report will help the city to demonstrate that it is maximizing rent revenues by negotiating rents substantiated by market rates, receiving the full value of capital improvements, performing market reviews and rent increases when required, and addressing expiring agreements. Certain agreements include clauses where the city is entitled to collect additional rents and recoveries. This can include percentage rents, which is a share of a tenant's sales or profits, and or the recovery of a tenant's share of water, hydro, gas, and other operating costs. We found that annual estimates and settlements of any amounts owing or due based on actual costs were not consistently or timely performed for a number of leases in real estate services portfolio. In our sample, where amounts were billed, they were generally collected from tenants. If there were collection issues in the files we reviewed, we generally noted evidence to show that city staff were taking action to try to recover unpaid balances. While we didn't note significant issues with collections, we did identify that amounts have gone unbilled and therefore uncollected over time. In our review of a sample of 45 occupancies, we identified 21 properties where additional rents and recoveries were not billed and collected in accordance with agreements. There was also one occupancy not governed by an agreement. Table 1 on the slide in front of you summarizes the locations where we were able to reasonably quantify unbilled rents and recoveries. More details can be found on page 26 of the audit report. In 9 locations in our sample, we identified approximately $4.5 million in additional rents and recoveries that have not been billed over time, in some cases dating back to 2002. At least $728,000 relates to 2017. These amounts need to be billed to both commercial and below market rent tenants. Some of these examples are discussed throughout Section B of the audit report. Given the systemic and recurrent nature of our audit findings, it is important that management take prompt action to address the concerns identified in our audit. Effective implementation of our audit recommendations can ensure that the city builds and collects all additional rents and recoveries in accordance with the lease agreements. I will now pass it back to Ina to discuss the roadmap for moving the centralized real estate service delivery model forward.
In moving forward with the new model, actions to consolidate leasing began in November 2017. In the first quarter of this year, Real Estate Services underwent an organizational restructure to align with the new service delivery model. As the city sets out its coordinated leasing strategy for city-owned properties, certain core functions and processes that support lease administration need to be addressed. Management recognizes and is prioritizing the need to improve lease administration processes. Moving forward, Real Estate Services has committed to defining expected outcomes and developing measures to evaluate performance of the leasing portfolio and establishing and implementing robust policies and procedures. As responsibility for lease administration begins to transition to Real Estate Services from other divisions like Parks, Forestry, and Recreation, it's important to ensure the right resources are in place to ensure lease administration functions, including ongoing lease reviews, renewals, reconciliations, and billings and collections of rents and recoveries are performed consistently and on a timely basis. So in conclusion, our audit highlights the need to focus on effective lease administration, and management has agreed to all 19 recommendations in the report. The recommendations will help to ensure the city meets its program and strategic objectives, including maximizing lease revenues and recovering rents and operating costs. And it also sets the city up for success under the new citywide approach to real estate service delivery. I'm going to pass the time over to David Jollymore, the Director of Real Estate Services, who has some additional comments.
Good morning, Mr. Chair and committee. I'm David Jollymore. I'm the Director of Real Estate Services at the City of Toronto. With me is Marco Cuoco from Business Management, who has been a key partner in driving the transformation of our real estate model forward. And Anne Usaloy from PF&R is here with me as well. So I just wanted to go through in response to the audit, just a couple of slides. And I wanted to start out by thanking the Auditor General and her staff for their work on this particular audit, and it's very complementary to the work that's been underway for the last couple of years as we've been transitioning to the new citywide real estate model. So we really do appreciate her support. I want to say we do, and just to reiterate what the Deputy Auditor General mentioned, is that we do agree and support all of the recommendations in the report. By way of background, we started the citywide real estate review in late 2015, and one of the key observations of that review was the distributed ownership for the real estate business and the fact that we had responsibility for real estate service delivery across multiple city divisions, agencies, and corporations. So as a result of the review, we brought forward a report, EX 16.4, and we proposed a centralized service delivery model. We did that in July of 2016, and we were directed by Council to report back on the specifics of the model with an implementation plan. We did that in May of 2017, and Council adopted the specifics of our centralized service delivery model, which comprised of Real Estate Services Division, the Facilities Management Division, and the creation of a new agency to deal with the real estate business for the city. And that's really the point at which we started the implementation of that new model. To support that new model, in November of 2017, we brought forward a report whereby we consolidated all the authorities for real estate into the real estate model, which really helps to consolidate, at least moving forward for new agreements, a consistent practice and process with respect to real estate matters, and specifically on leasing and lease administration. The new model started operating on January the 1st, 2018, and it's on that date when those consolidated authorities came into effect. And of key to note, and to kind of connect the dot to the lease administration, a key output of our work is going to be the development of a citywide leasing strategy and practices, and that's tied to the delivery of the citywide portfolio strategy. Work is currently underway with CreateTO, and we expect to deliver in first quarter of 2019. The strategy contains three main components: the portfolio strategy and the use of city-owned space, and the need for lease space. So the space that the city owns and leases out, and the need for the city to lease in space for its program needs. 2 is operations surrounding and the management of the portfolio, the collection of rents, the collection of additional rents, account reconciliations, treatment of property taxes, and other items that have been identified in the Auditor General's report. And thirdly is the performance of the portfolio, our program objectives and financial objectives being met in our administration of the portfolio. So we expect to deliver that through that strategy through the course of 2019. My final slide. During the course of the citywide real estate review, we knew we had issues with respect to the way that we were managing lease administration, and we certainly identified that early on in terms of an opportunity. In terms of actions to date that have been underway within the consolidated real estate model and in partnership with key divisions like Parks, Forestry, and Recreation, and others, we commenced process reviews in the first quarter of 2017, and we've worked with other groups outside of the operating division. So we've been working with the internal auditing group, as well as accounting and revenue services. In Q2, we commenced work on the implementation of the consolidated model, as I mentioned. I also mentioned in Q4 the centralization of authorities. Also in Q4, we partnered with PF&R in the creation of a transition plan and a responsibility matrix between the Real Estate Service Division and the operating unit to ensure that there was a plan to transition current real estate work from PF&R into the city's Real Estate Services Division. The division itself underwent a major organizational restructure in the first quarter of 2018, where we aligned key functions and created a net new function specifically focused on lease administration, and to ensure that we were separating the duties between lease negotiations and agreements and the administration of leases moving forward, and ensuring that we were managing the leases ongoing and collecting the rents and the additional rents and other items. And there's continued, since January 1st of 2018, there's been continued collaboration with PF&R, with Economic Development and Culture, Parking Authority, X-Place, and other corps and agencies since the consolidation of the authorities under the new model. We've put in place a dedicated team to drive our implementation plans, which we've provided in high level in response to the audit report. And really it's foundation upon 4 key things: data, process, system, and people and talent. So we have work streams underway which address policy and procedures, development of new policy, as well as tuning and updating of current policy, business analysis and record keeping and record management, a new leasing system. We're working with a system that's 12 years old, and I guess it adds more challenge in terms of our day-to-day work. So we have been working through the IT governance process to justify our need for a new system to help us better manage our portfolio, which is highly complex. And then in terms of tactical action, as quickly as possible, is looking at the high-value opportunities, high-risk opportunities in the portfolio and going after them. And that's the last point, basically, which is a review of the agreements and driving our actions based on value and risk. Thank you.
Thank you. Councillor Hart, you'd held this for questions, but I'm going to open first to members of council that are here today.
Hi there. Good morning, everyone. 1, my favorite committee, next to Parks and Environment. So just with this whole list of rents that we didn't collect, how does that happen? Can you just walk me through different scenarios as to how we wouldn't be collecting rents?
So through you, Mr. Chair, in response, Councillor, so there's a variety of different factors related. The annual reconciliation process is the key issue. So we have to get into a business process whereby we're doing annual reconciliations to ensure that we're administering the leases per the agreement and we're collecting what's due to us per the agreement.
I just want to clarify, the rents are being collected at an estimated amount on the operating cost recoveries or the additional rents. It's the reconciliation process, as David mentioned, that where the differential between the actual costs and what the estimates were. So the majority of the tenants that were sampled were paying an amount. It's just, was that the correct amount is the question.
In addition, through you, Mr. Chair, there were several locations where utilities had never been built. So these are things like water, gas, hydro, where there might be a meter that the bill was being sent to the city and it wasn't being charged back to the tenant, or there was no meter at all.
And the tenant never fessed up that maybe they weren't paying.
So I think in response, Councillor, part of the issue is relative to the understanding of what's in the agreement. Several of those agreements aren't commercial in nature. They're program related, and there could have been a lack of understanding of what was due. Moving forward, all the agreements are clear. They're going to be communicated and well understood by both parties, and we're going to administer them to the letter of the law of what's in the agreement. Okay, and
this 12-year-old system you're using, that worries me. So how can we move forward, or can you elaborate on what you're doing for that, and if you need our help to get you there?
Yes, so we do have SAP. We have a real estate module in use in SAP. It is a pretty old system. It is 12 years old. It is our system, and we need to make sure that our staff are trained and well attuned to its use in the near term, because that's the system that we have, and we have to live with it for the time being. That being said, we're moving forward on the assessment of new systems. We're doing a market scan to look at what's out there in the market, which will allow us to more efficiently and better manage the business, because it is a large, complex portfolio that we're dealing with.
And then, I mean, you are doing some great work. For example, I love bragging about the second floor of Metro Hall. Do you want to elaborate on some of the good work you're doing with leasing, with your leases, collapsing a lease and, adding capacity and those kinds of initiatives?
Yes, correct.
Not used to bragging.
So what you're referring to is the office modernization initiative, which is underway, and that is related back to the overall citywide real estate portfolio plan. And one of the key components and opportunities is our office portfolio, which is quite sizable. And our objective is to make better use of city space so that we can collapse leased-in space.
Great, thank you.
Thank you. Councillor Hart.
I'll start with a quick question for staff. On page 23 of the Auditor General's report, in your presentation, you talked about process reviews, separation of duties. And on page 23 at the bottom, it talks about a lease expiring and a related loss of $341,000. Can you just explain to me the process, maybe in that example, or in any example for that matter, around separation of duties, so that 6 months to maybe close to a year before a lease expires, who knows about it? Don't need names, but how does that process work? And more than one person involved to ensure that there's separation of duties and that one person isn't responsible for missing a renewal, which could lead to a number of things.
Right, so part of the, through you, Mr. Chair, part of the reason why we restructured the way we did was there were a couple of reasons. One was we wanted to better align skills. And one of the key skills in the real estate services division is the transactional skills. So we wanted to make sure that we had focus on transactions. So when we're negotiating an agreement, we're negotiating the best position for the city, and we're covering off things that the Auditor General has identified, including property tax treatment, capital, and other things. So we've separated that duty from the ongoing maintenance and management of the agreement, which means that we're ensuring that the account is up to date, that we're collecting the rents, that disputes are resolved, and those types of things. As the leases come due for renewal, and we're having a bit of debate about how much time in advance that we kind of flag for action back to the transaction team. So the lease administration team will flag for action. This lease is coming for renewal. These are the key issues associated with this particular agreement. Goes back to the transaction team for renegotiation. So that, before we restructured, all of those duties that I just mentioned were all done by the same function and the same staff. So we've separated those functions moving forward.
So just a quick follow-up question. When you say they were done by the same staff, that wouldn't be the same individual staff person, that would be the same group of staff?
Same group of staff.
Okay. Just a couple of quick questions for the AG. In the 2006 report, I went back and read that. If all of the recommendations were implemented from the 2006 AG report, and I'll be asking this on a couple of other reports, would this report be here?
When the recommendations are implemented, presumably the controls will be fixed. If the recommendations aren't implemented, the problem continues.
Right. So, what clear or even generally is new in this report that wasn't in the 2006 report? What's different now?
So, through you, Mr. Chair, the recommendations from the 2006 report were implemented by management largely by 2009. So management agrees that on an ongoing basis, they need to make sure that as the business matures and as process changes, that they keep up to date and that they're continuing to reflect on what additional process improvements can be done on a continuous basis. In terms of newer recommendations, I think what wasn't captured in those, a lot of the issues are the same. In addition to that, we talked about capital improvements, where there needs to be better tracking about capital improvements that are made, commitments to that. And then a lot of them are actually from them, from similar.
And then there's some recommendations that have come up more recently in the property and the water billing union station that still aren't fully implemented, but they're underway with doing it. It's a great time to pull everything together and get it into the real estate review citywide. But certainly when they do the implementation, you have to really make sure that the controls are in place such that when they're implemented, they continue to operate and that we don't keep going through the cycle of making the same recommendation.
Thank you.
Thank you. Are there other? Councillor Davis.
One of the findings, maybe to Mr. Jollimore, was that there was high staff turnover in the department. So I presume that means you had a high vacancy rate in the department. And I'm wondering, what is your vacancy rate, and have you been able to address the turnover and vacancy issue?
So staff turnover is and continues to be an issue in the division. So we have a large number of, so complement management is a challenge that drives the need for temporary staff, and we have net new business that we've added, Metrolinx projects among other things. So we do have and positions is another contributing factor. So we have a plan to address all those. So we're increasing capacity of the recruitment engine while we fix up the positions, because we have too many positions where you can't differentiate between those different levels of positions. So we want to collapse those down, and we've been working closely with our colleagues in 79 to be able to do that, which will kind of start to address that issue of staff turnover.
So do you have a number on your vacancy rate?
It's in the range of about 15%.
15%?
15, 1-5.
Wow. So is that it's not, I hear, it's not a budget issue? You have sufficient budget?
No, it's not a budget issue.
It's a retention issue.
So through the chair, what I would say, Councillor, is one of the things that we have been doing with financial planning, we had a lot of the roles in the leasing side were actually temporary roles. And what we have done now in working with financial planning is converting them to permanent. So by doing that actually allows us to actually retain people and have a better retention strategy than what we had.
This is an issue I have tried to get at for 10 years. The
So we've moved
jobs
this one
that are
forward.
temporary.
Right.
So you are converting?
We have converted quite a few on the leasing side, yes.
Okay. The other thing you talked about was, and I heard something different just earlier about end-to-end responsibility for leasing with particular staff, so that chunks of, you had divided the work differently and now you're reorganizing that work? Is that?
Yeah, so basically we've separated the lease negotiation and the transactional piece of the work from the ongoing lease administration piece. And the lease administration piece was the focus of the audit. So
Right.
the findings are related to our ongoing management of the portfolio once the agreements are in place. So we've taken those duties and we've separated them through our reorganization of the group.
Oh, that sounds opposite what I thought I meant. But the other thing that isn't clear to me is the degree to which the leasing function still resides in all of the divisions. Have you not consolidated them, or are you putting in place different kinds of monitoring? It sounds like you're putting in more centralized monitoring. Why would you not just consolidate all those leasing?
So it's a bit of both, Councillor, to answer your question. On the transactional side, there is consolidation, and with the authorities being under the real estate model, the transactional pieces are done. Okay, so we're already working in partnership with agencies, corporations, and city divisions on that piece. The ongoing management of the leases is distributed, and we need to work over time that we need to centralize and consolidate that work over time, right, as we build up the lease administration function.
Okay. Now, the conclusion here is that we've got a lot of vacant property that we could lease out and make more money, and there's projection of potential loss of revenue. There's also the other side, that space can be used for city functions. So I hope that the recommendations in here don't drive us to lease it out as opposed to use it for city functions.
So, Councillor, yes, we agree, and that's why the leasing strategy and how we use the city space and city space that we lease out, that'll be part of the overall real estate portfolio strategy. But your point's well taken. If there are city needs for the space, then the city would use the space if it isn't otherwise committed through an agreement.
So I know that you're creating an inventory that hadn't existed before. Is that correct? And have you done state of good repair audits on these facilities to know what kind of capital investment is required? That was identified as a problem with the leasing administration.
So that's part of the citywide real estate portfolio strategy that's coming in 2019. The leasing piece of that's kind of a subset of the overall citywide real estate strategy. Did I answer your question?
I think we are. So you're going to come back with what space is potentially available for city uses and the capital costs associated with the repairs or.
So through the chair, Councillor, what the team is doing citywide right now with the group that we've put together is that we're actually doing the overall portfolio plan, to your point. It will cross the entire city, all agencies, corporations, and divisions. We will look at what the state of good repair is. We'll look at the opportunity to leverage some of the within the groups and look at where there's an opportunity to actually unlock more land value for city purposes too at the same time.
Thank you.
Thank you.
Are there other questions from the committee members? I have two, actually. I wondered if I could have comment from, I think, the auditor on this one. In your view over the process, how is it that the projected revenues from leases and, I guess, revenues from recoveries of payments for utilities that may have been missed didn't square up with budget projections? Were they not material enough in the overall scope that somebody would have noticed that there was a revenue projection of leases that were to escalate, but they didn't actually end up changing those clauses, or is it just they're too far buried in the system to actually see that?
So I'll answer first, and I'll ask Ina then if she would add more comment if she would like. It was really, we couldn't see that the hydro and the extra bills were in some cases even in the system. So we had to go to Toronto Hydro, start to try to divide up a property, look to see what portion should be allocated to a group. So in some cases, it didn't go in. How that happened, that's really a question for management, because we know that it's not right. How it happened is really a question for management.
Well, just to be a finer point on that, like I would have thought that the revenue projections would have offered the check and balance, that over time you'd see there was a gap between what was actually coming in versus what had been planned year over year in the budget. And is it because these margins are so thin that it wasn't detected, or is there something else?
So the margins aren't thin. In some cases, actually, it was quite substantial. It's simply, I think, that really for all things, and when we're looking at this file and other files, it's really wrapping your head around what is it that you have, what should be coming in, and really having that methodical listing of the pieces and the components that make up what the expectations are, and then executing on those. So in some cases, the margins were thin. In some cases, they weren't. And so really it's for management to comment on how things happened, that they were missed.
Okay. Did you want to make a comment on that, or?
Just to say that, I mean, in aggregate, the portfolio is large. In aggregate, it's a big dollar amount, right? On an individual basis and based on the interpretation of what's in the agreement. And it's not an excuse, but that's kind of the day-to-day reality in terms of we look at an individual agreement, there's an interpretation of that particular agreement. There might be a difference of opinion in terms of the interpretation, either by the tenant or by a program that we support. In any case, I think in aggregate, it's not getting captured. And I agree with the Auditor General. Moving forward, it's a large portfolio. We have to figure out how to manage it properly through the people, through the tools, and through the process.
Okay.
Yeah, and just for information, what we did was we took the top 40 properties and then we started working from the top down, and I think that would be a good strategy to get the biggest dollars through the door faster.
And that is management's approach.
Okay, I wanted to ask about one other item in here. There's a little piece buried that stood out at me, and that was the lease administration charge. And I think I'm going to ask first of the auditor and then of staff about this. But I wondered what you had seen in other jurisdictions, other governments, other organizations about the popularity of a lease administration charge, and whether or not it was a tool that could help strengthen lease administration, because it brings in a revenue stream to help offset those costs, to help pay for itself.
Through you, Mr. Chair, an administration fee on recovery of operating costs is something that is not uncommon in the industry, real estate industry, leasing industry, but it needs to be incorporated in a standard lease agreement. And then as I think, and management can respond to that as well. Like it's something that they have in, can consider in their standard agreement, but then it's something that would come up in negotiations of a lease.
Right. So going forward, you would implement those. So I just wanted to continue this question with management and add a piece to it. Is if we had a look at lease administration charges and building them into leases on a go-forward basis, that would bring an additional revenue stream. Are you already looking at this, and is there a way that you could firewall or separate out the revenue that comes from the lease administration to ensure that it goes back to hiring up and supporting a system of a lease administration, be that actual staff or a systems approach, so it self-pays for itself, and that there's an incentive in there to make sure that you're on top of the leases, because that will generate lease administration fee revenue to pay for itself?
So, Mr. Chair, we are looking at that. We are looking at it in the context of what the industry is doing. In terms of application of applying an administrative fee, we just have to be careful about how we apply that policy. So for commercial leases, absolutely yes. In the case of community-based tenancies, we may have to look at that. But we are looking at it. It is in the context of our work plan, and we'll be coming back with that.
Thank you. Is there anyone on the committee that wishes to ask a question or to speak on this matter? Seeing none, I am going to speak extremely briefly. I do have a very small amendment, and that is to recommendation number 18. It's about this lease administration charge. The recommendation asks the staff to look at it. All I'd like to do is just add a little piece that says, look at it and report back to, I think, GMC committee, so that we can have a look at that as council to see if that's something that we would like to move forward on. I think there's a lot of opportunity in this little fee because it creates a revenue stream that can bring in more money to real estate so that they can put more resources into administering the leases. And there's a sort of a self-governing feature in that as long as you're generating revenue and you're administering the leases, you're actually bringing in more revenue to fuel the machinery a little bit better, and it works very efficiently. So I hope you support the report back. Other than that, I'm happy to move the recommendations of the report. And with that, I'll call for all those that are in favor. Any opposed? And that item is carried. On to AU 13.10.
Mr. Chair, before we begin another item, if it's the will of the committee, I'm prepared to release AU 13.16, the Toronto Transit Commission managing telecommunication contracts and payments.
All right, thank you, Councillor Ford. Is everyone okay with that on the committee? Would you like to place the, to move the item?
I'll move the item.
So Councillor Ford is moving AU 13.16, managing telecommunications contracts and payments. All those in favor? That is carried. Okay, so we are at AU 13.10, review of urban forestry, permit issuance and tree bylaw enforcement requires significant improvements. That's been held in my name for a presentation, and I welcome Jane Ying and your team to make that presentation.
Thank you. I can assure you this is a short presentation. We have 12 slides and 3 of them are photos. Just give you some background first. In 2017, the city spent sorry, I forgot to move the slide. In 2017, the city spends $64 million to protect, maintain, and enhance the city's urban forestry. Urban forestry, which is a branch within the city's parks, forestry, and recreation divisions, has 3 key functions: tree planting, ongoing tree maintenance, and permit issuance and bylaw enforcement. This audit report, however, only focus on urban forestry's permit issuance and bylaw enforcement functions. We are continuing on our work on the other 2 programs, tree planting and tree maintenance, and we may report back in 2019 if needed. To remove or undertake construction work near a private tree or a city tree, they must apply either a tree removal permit or a tree injury permit from urban forestry. So in 2017, urban forestry received $3.2 million in application fee for an estimate of about 5,000 city trees and 5,800 private trees that are included in the permit applications. Including there are other permit-related fees and deposit collected by urban forestry. In total, it collected about $13.5 million in 2017. So we identified there are areas that urban forestry did well. For example, in 2015 and 16, it developed a number of procedures to standardize its administration of the tree bylaw requirements. Last year, it established a 6-person or maybe 7-person now enforcement team, which helps to improve the complaint response time and also free up staff resource to focus on permit application review. Here are some examples of tree protection measures that you may see on the streets in the city. We are going to talk about 4 key areas of our concerns here. I'm going to very briefly touch on each one of them. So our first area of concern is weak, controlled, and insufficient management oversight. So urban forestry does not have adequate information systems to support its permit functions and management oversight. There are no effective control to prevent or detect unauthorized permits. Its current TMMF system, which has been in place since 1998, was not designed for permit functions. So staff use an Excel spreadsheet to print permits, and as we know, an Excel spreadsheet can be easily copied, and you cannot track how many permits actually been printed from a spreadsheet. Multiple staff in each office have access to the spreadsheets. We also found much of the expected basic permit data is not properly tracked or coded in the system. For example, the number of trees we just mentioned that are included in the permit, which actually is a calculation, we have to calculation backward based on the number of feet they collect divided by the application fee to come up with that number. It's not a number we can extract from the system. This also caused significant delays in our audit process, and we could not use our normal auditing software to analyze the entire permit data set. We have to sift through and read through a large volume of individual files, even just to extract a small number of relevant files for our review purpose. There is no requirement for supervisory review. So we note the misconnection or incorrect calculation of permit-related payments by staff. We reviewed 28 tree removal applications, and we noted the cash in lieu of planting amount in 4 files were incorrectly calculated or collected. This results in miscollection of about 20% of the required cash in lieu amount in the 28 samples we reviewed. We also reviewed a sample of 9 approved applications for the removal of city trees. All of the 9 should, the applicants should be required to pay a appraised tree value, but we found that in 3 of them, they were not asked to pay the appraised tree value. And actually, in one of them, the staff told us he didn't request that because he had a backlog of work. Urban forestry also does not have requirement for staff to check compliance with the replanting requirements. So when people apply for a tree removal permit, particularly for the private tree removal permit, they are required to plan a replacement tree. Like sometimes it could be 1 or 3, depends on the type of permit. So for private trees, there's no deposit. They don't need to pay a deposit. So the compliance is really relying on the homeowners' cooperation on that. So right now, urban forestry has no requirement for staff to go out to check this compliance. So we do recognize it's not resource possible for them to send every single to staff to every site to check that. But there are more efficient methods, such as asking for photos of the tree plant or a copy of the nursery receipt to show that they did purchase the tree. There are other more efficient methods they should consider and incorporate in the program to provide some level of assurance. We also note inconsistent practice among district office regarding how staff determine the appraised tree value. The appraised tree value can be quite substantial. It can be over several thousand for each tree. And also the inconsistent practice among staff in how they verify the tree protection plans from homeowner. So there's a lack of control over issuance or permit exceptions. Under the bylaw, under certain specific circumstances, the applicants, they may be granted an exception so that they don't need a permit to remove or injure a tree. For this instance, a permit, for example, a permit is not required if a tree is deemed to be in imminent danger of causing damage or injury to life or property. So when an exception is granted, the applicants, they can remove the tree without paying any fee, any application fee, any other fee. They also don't need to replant a tree. The replanting requirement does not apply. Because all the exception request number are mixed in with the application number, we cannot tell you exactly how many exceptions are being approved every year from the system. We done our best estimate and sift through the data. We can tell you there's every year that at least 700 exception requests come in, but we cannot tell you how many been approved because we couldn't review all 700 files. We did review 30 file approved exception requests, and we noted in 3 files that the tree condition appeared to be poor, but not necessary an imminent danger. So this is one of the example of the 3 trees we review. We consulted the staff who approved the exception or the supervisor in charge, and they agreed that these trees were in poor condition, but this doesn't constitute meet the exception criteria. However, they granted the exception for the applicant. We noted that a large amount of owed and unclaimed deposits. So when people apply for a permit to remove or injure a city tree, they are required to pay a deposit. That deposit is refundable, but they have to notify urban forestry for planting 2 years later when the tree is in good condition, and urban forestry staff will need to attend the site and verify the tree is in good condition, and then they will refund the deposits. So as of February 2018, urban forestry had a balance of $29.3 million in refundable deposits collected between 1994 and 2017. Approximately $19.5 million was collected prior to 2016. So why are there so many owed and unclaimed deposits sitting there? Urban forestry does not have a policy to address owed and unclaimed deposits. There's no criteria for them to consider what are owed deposits. They have no specific follow-up process for staff to address these deposits. It relies on district staff to conduct follow-up on unclaimed deposit whenever resource allowed. It has not conducted a comprehensive review of unclaimed deposits since 2008. And we now sample review. We note there were instances where homeowners actually asked urban forestry to come to look at the tree so that they can get the deposit refund, but there's a lack of action from staff to follow through to attend the site to verify whether the deposit can be refunded. On the other hand, there's also a problem is urban forestry doesn't have a clear guideline to help staff to decide under what circumstance certain deposit may be considered forfeit by the applicant. So this may cause duplicate multiple inspections by staff. To give you an example, this is an example we included in the report. This is the case history of one file, one case. So in 2005, the applicant paid $2,900 in planting, tree planting security deposit for planting 5 trees. In November 2006, the staff inspected the site and verified the 5 trees were planted. However, they cannot refund the deposit because they have to wait for 2 years to make sure the trees are in good conditions. So between 2009 and 2016, the inspectors went back to this site 6 times on different occasions. Every time we went back, it said the same thing. Essentially, the trees were not, some of the trees were not in good conditions, and the homeowner need to take corrective actions. But then the next time we went back, it's the same thing. So as of February this year, the deposit of this $3,000 that was received 13 years ago remained on hold, and the file is still open. So on one hand, we do see cases where the inspector should go back because of the homeowner request and process the refund. On the other hand, we see there are some cases the inspector did keep going back, but there really is some indication the homeowner are not in compliance with the maintaining the tree, and it is really there should be a policy to say under what circumstance that would be enough, and then we can consider the deposits forfeit by the applicant. And that, to us, it really underscored the importance of making sure the management, the process is effective and efficient. So the last issue, I want to show you a couple pictures of the bylaw contraventions. On my left-hand side is the tree that is potentially damaged by soil compaction with construction material and equipment. And on the right-hand side, it shows the significant wood damage caused by a trench that was stuck too close to the tree. So our last concerns relates to the lack of incentive for the bylaw for compliance. So what we found is when the applicants who apply for permits, they are required to pay certain fees, but individuals who illegally remove or injure trees, they are not required to pay the same type of fees. So to give you an example, on the slide, you see the green column is when an applicant who applied to remove, we give you an example of if you want to remove a city tree for construction purpose, the person will need to pay construction application fee 334. Appraised tree value, assuming this is a sugar maple 40 cm diameter, that will be $3,400 for appraised tree value. If they want to plant a tree, according to the requirement, they have to pay $583 for a deposit, or if they have no space to plant, they need to pay a cash in lieu of replanting. That's also $583. So in total, it would cost the applicants $4,317 if they apply for permits. And there may be additional costs if they hire an arborist for that. But if an individual who illegally remove a tree, and if this is reported to urban forestry, the person will need to pay a contravention fee of $699. There appears to be no authority for urban forestry staff to really require the rest of the fee. They can request the individual to pay for the rest of these fees on a warranty basis, but not under the current bylaw, they cannot require that. So in our view, the existing bylaw for contravention are not conducive to compliance. So our report contains 12 recommendations to help improve urban forestry's permit issuance and bylaw enforcement functions. Management agreed to all 12 recommendations, and actually they have already taken steps to address many of the recommendations. This concludes our presentation.
Thank you. Councilor McMahon, I know that you're here today with interest in this. Do you have questions?
Sure. So first, I'm just going to look at the page 4, I guess it is, with the examples of the tree protection zones. So do we have a standard for a tree protection zone?
the chair to the councillor, yes, we have standards for the tree protection zone, and those two are examples of standards. The hoarding is where we can have it, and the snow fencing is used where sight lines may be impacted, so road allowances.
What percentage of people in Toronto actually use these tree protection zones when you're out inspecting?
Oh, when we're inspection.
Through you, Chair, if you get an application for a tree permit, you have to abide by those tree protection zones. This is why we have a compliance unit now that goes out and enforces that.
Is that like, okay, I've rarely seen this. So, what about forestry and buildings? How well do the two departments work together for construction sites?
So through the chair, we have, through the results of this audit, but also through ongoing work, are beginning to work together with building to see how we can streamline some of the inspection processes. If that's what you're asking.
Yeah, so that's part of it. Because what I find is, so a person gets a permit to injure a tree, and by the way, first of all, I have a question about that. Why do we call it permit to injure a tree? I feel it should be permit to protect a tree. And I feel that semantics is really misleading because residents who are worried about the tree who live nearby get all hot and bothered. What? They're going to injure the tree. And then the homeowner, the builder, is thinking, hey, I can injure the tree. Like, it's not protect. So I wonder the history of why we say that, and I'm looking into changing that. I think it's very misleading.
So through the chair, tree injury is an industry term around the process, around injuring a tree but maintaining its survival. These are all industry terms that we use in accordance with, various not legislation, but guidelines that are out within the industry. I agree with you. The word injury can be very misleading to public and residents who aren't aware of the terminology within the industry about what that means. And it's something that we can consider, certainly, both in how the bylaw is worded, but also in the kinds of communications that go out with those notifications around tree injuries and tree removals. It's a very fair comment.
Okay, and so back to this forestry and building situation I'm dealing with right now in the beach. And so the homeowner had his plans vetted through buildings and forestry signed off with a permit to injure the tree because apparently there was no shoring in the plans that forestry saw. Buildings are saying that shoring is required, and now forestry is saying, well, if that's the case, then it won't be injured, it'll be remove the tree. And it's an old growth oak tree, and neighbors are going crazy. So I'm just wondering how that, like right at the beginning, are buildings and forestry in the same room or reviewing these applications together, sitting down face to face, or is it email back and forth, or how can we better align that?
So through the chair to the councillor, we don't sit in the same room. It's a process. They're two different departments. So what happens when they apply for a building permit, buildings will give them a tree declaration to come to forestry. So when they submit the drawings to forestry, we look at what drawings are submitted. We're not authority on building code, so we wouldn't require shoring or such. If there's no shoring identified and the injury that's being proposed, the tree can withstand it, we would then put a release. If things and the conditions change and it come back to us with changes to the drawings, then we have to change our position so that the injury is no longer susceptible to the tree. It would cause it to be removed. We have to remove it. So your question of a cohesive development between building and forestry. We're not at that point yet, but we are working closer with them to look for solutions and with city planning. So hopefully in the future we'll have a better working relationship, but at this point we're still reliant on other divisions giving us the information that's required for us to make a decision.
Thank you. Councillor Davis, you're next on the list.
I noticed that you didn't mention the staffing issues in your presentation, and it's very clear from the staff response throughout that there is inadequate staffing to meet or to achieve the recommendations. And so I did want to ask Forestry, what is your vacancy rate?
So through the chair, I'm just giving Jason a break so he can cough some more.
Yeah.
The subject of this review, TPPR, there's a few things going on in the staffing. So the only real vacancies we have in this area right now, based on our approved complement, are, just as the leasing folks have indicated, we're in the process of converting some temporary positions for compliance into permanent positions. So we have, if council remembers, we had a pilot project around increasing compliance staff that was offset by revenues that were collected through compliance contravention fees. So we've now made that program permanent, which was approved by council during the budget process. And the only vacancies we have in this area are specific to those compliance officers. We're very close in this area to a very near 0% vacancy rate otherwise. As noted in the report, there's a lot of areas in the recommendations that were outlined that to achieve the recommendations, because the processes are currently manual, would require an increase in our resources to be able to comply with the recommendations.
Right.
And as in the report in our response, we've indicated that we'll be reviewing what's required and including it as a business case as part of the 2019 budget process, operating budget.
I saw that. And so there were recommendations about training, there were recommendations about greater oversight in terms of supervision, there are recommendations for new methodologies for compliance and inspection, all of those things which required additional staff. So there will be a request for additional staff in the operating budget to try
through the chair, as indicated in the staff response in this report, that was our response to the recommendations that we would be putting together a business case around the additional staff resources that would be required. And I should note that in many cases, those staff would be required for the manual inspections that would have to take place.
Right. The difference between you putting in a business case and a budget request coming to the political level is there is a process in between that often means we don't see your business cases, and we don't often see what other changes are made. I guess what I'm really asking is, will we see, I guess, maybe to do we have any any budget folks here?
I'm not a budget folk, but I can speak to the process. Through the budget process, we will be putting in a business case, which will be included as an enhancement to our budget that will come before the review process that is just starting right now. And through the recommendations of this report, it will be included in some context within the analyst notes going forward for council to consider as a recommendation of this audit.
Yeah, I mean, the reality is we don't see the staff recommendations. We see financial management's recommendations. So I trust we'll see in some form in the analyst notes what is needed to achieve. In fact, last year someone requested, I think it was the chair, requested to identify what was in the operating budget to achieve compliance with the Auditor General's recommendations. And I remember financial management scrambling, or it was the Auditor General trying to quantify whether or not there was sufficient funding to achieve those recommendations. Anyway,
thank you.
Those are my questions. Thank you.
Councillor Carmichael Greb.
Thank you. I just have a couple of quick questions, hopefully quick. Do we have a standard for diseased trees that constantly are being looked at that have issues year over year? Is there sort of a guideline that's in place so that if a tree is continually causing problems but still healthy, that we look at that differently than we would a regular healthy tree?
Just, I'll ask, through the chair, I'll ask Jason to answer, but you're referencing a tree that may have an acknowledged disease, such as, you know, Asian longhorn beetle or some kind of infestation or other tree disease specifically, and what the approach is to dealing with that on an ongoing basis.
So through the chair, there's a science behind how we inspectors interpret the health of a tree and signs and symptoms. So yes, we would treat a tree that's terminally diseased or terminally ill one way, as opposed to a poor condition tree that could be essentially, with the proper maintenance and care, revitalized to become a healthy tree. So yes, there's a different approach, and there's industry standards, and there's a whole bunch of science behind it.
And along those lines, is it when someone goes out to inspect a tree, is there, yes, there's science, but is some of it subject to interpretation of the arborist that's looking at the tree?
Certainly, just like anything else, when you go see your general practitioner, your doctor, they're going to make interpretations based on the signs and symptoms that you're producing with your illness. Arborists is the same way. They're trained, generally minimum 2 years of a college, if not 5 years of university, to identify those signs and symptoms, tree morphology, your tree species, and how they grow. So yes, it is subject to interpretation of the arborist, but they use a number of factors when diagnosing a tree's condition, and a lot of it has to do with the current condition, but the history of the condition, the history of the tree, and the characteristics of the species in its growing environment, soil conditions, a number of things.
How do we ensure then that there's a standard around that? Like, I mean, we've dealt with an issue of a tree that was sick for 10 years, and the arborist came out and said, no, can't cut it down, can't do anything.
Through the chair, I understand. So what happens is, what validates our position a lot of times is that the private homeowner has to produce an arborist report. Mm-hmm. In most cases, we agree with the arborist report. The arborists that produce these reports are certified under the International Society of Arboriculture. There's a code of ethics and conduct that they have to conduct themselves with. So 9 times out of 10, we have agreement with the arborist. And so therefore, there's that collaboration that takes place. When we're in disagreement with their arborist, we generally provide a second opinion, a second approach to that inspection.
I'm talking more city arborists. When city arborists have one opinion and you bring another city arborist out and they have another opinion.
Are you referencing a city-owned tree or a privately owned tree?
This was a city-owned tree.
Right, so a city-owned tree, the onus would be on the city to make the assessment of the condition of the tree.
Right, okay. My next question, how do we go about protecting our residents from injury or significant property damage from trees?
Are you, so to reference privately owned trees, if they're privately owned trees?
Privately owned.
Privately owned trees are the responsibility of the homeowner from an ongoing maintenance perspective and a tree health perspective. So if there are issues with privately owned trees that are reported to us through either 311 or through various residents or other sources, a city crew will go and inspect the tree. If there's danger with that privately owned tree, they'll issue an order to the homeowner or the property owner to mitigate those dangers. And then over a period of time, if those dangers are not mitigated, the city will go in and make the private tree safe, and then charge the cost of that back to the homeowner.
But what if it is a privately owned tree, it has caused damage, continues to cause damage, and we as a city say, no, sorry, you can't cut it down? Or
I'm not sure what the reference, where it's causing damage, or without the specific, it's very hard to sort of answer, because there's many different sort of instances of types of damage and types of inspections, and whether it's a privately owned tree that's causing damage to another private property, there would be some kind of responsibility between the two homeowners to come up with an approach around that tree. There's many different sort of ways to interpret it, how specific to the instance of where the tree is and what kind of damage it may be causing.
In my ward, I have a lot of trees. Last question. And the view of my residents in my ward is that forestry is difficult to work with from a community level. You know, automatic answer is no, which means you automatically have to appeal, which to them is a money grab issue. That it's just, if you're applying to take down a tree, then it's just a money grab. And then they're more likely to cut the tree down illegally. Or if it's appealed and it has to go to community council approves it, automatic no from council, from full council, because you have 44 people saying no to a tree that has a specific issue in one ward. How do we change that mindset of residents? Because that's often why residents illegally cut down trees, because there is no penalty, really, if you cut down a tree illegally in your backyard.
So through the chair, I mean, these are the reasons and the objectives around the tree bylaws altogether, is to put standards in place around how trees are treated in the public realm and in the private realm, and all of those are approved by council. If we look at, we've submitted many reports on this over the years. We actually, through urban forestry, approve more tree removals and tree injuries than deny. And in most cases, when those requests come forward to urban forestry and to PF&R, there are real reasons why the tree should be removed. Either it's a danger, it's structurally unsound, it's infected, there are all kinds of reasons. Acknowledged when some of these requests come forward to us and urban forestry does not agree with the homeowner's requests. These are disagreements between the interpretation of the health of the tree, and we try to communicate as much as we can. The appeals process is there for those homeowners who don't agree with the process, and that's the processes that council has set up through the bylaws and the administrative bylaw to deal with these issues.
Thank you. Are there any other members wishing to ask questions?
Sorry, if I just missed one question.
Did you have other questions?
Okay. I just have one.
Is it the consent of the committee to permit a second round? I'm seeing yes. Please go ahead.
I just want to ask about the exceptions. And why don't we require a replacement for an exception? A replacement tree planting, sorry.
Through the chair, don't believe that's fair. I mean, in this particular case, an exception means the tree's hazardous, it's dead. It's not contributing in any way to the canopy or our goal council's given us to a 40% canopy cover. So we don't believe that's a fair approach to make the homeowner say, if you don't take we won't let you take your tree down unless you provide a replacement tree, because the canopy itself isn't contributing to our canopy goals. It's when the tree's in poor condition or that we allow a tree to be removed that we ask for the crown density to be replaced with tree planting small trees.
And so we heard that in order to obtain an exception, it needs to be in poor condition or imminent danger, I guess. So how do we determine imminent danger? I mean, I have people who call me, parents who call me, they have a black walnut tree out back and they feel it's imminent danger, the walnuts are going to fall and harm their child, and to them that's imminent danger. Like, is it selective? Like, who decides?
So through the chair, on specific to black walnuts, because this was actually a request that came through council last year, if councillors remember, around exempting black walnut trees from the requirements under the tree bylaw. So through the work of staff and through some comparators with other municipalities and other bylaws, council approved and that black walnut trees, although can be somewhat annoying because of the type of tree they are, did not qualify for an exemption under the tree bylaw.
But I mean, that's just an example. But who does?
I mean, I think that We look at provincial standards, we look at industry standards to try and create, the reference around how we make these decisions so that they're not discretionary. There's many different types of trees and different things that fall from trees. So, these are the types of determinations we make when we review these kinds of requests.
And do you ever consult or inform the councillor of these exemptions? Because I remember one actually in Councillor Davis's ward that the pine needles were flowing through the window into the baby's crib and piercing the baby's skin. And the tree needed to be removed because it was an imminent danger.
So through the chair, that we wouldn't consider that an imminent danger. If we did, we'd be removing almost all of the pine trees in the city.
I know.
So these are the kinds of considerations that we take into account: the type of tree, the amount of those trees, industry and provincial standards, and trying to create fair, guidelines that we follow across.
So it doesn't come to us at all. You guys just determine.
We try our hardest.
To avoid us, or to?
we try to. I'm speaking for Jason through the chair.
Yeah.
I think staff try their hardest to try and mitigate what is going on in that particular instance. Everyone is different. Every property is different. Every tree is different, and some of the decisions there is some level of discretion that's involved, but we do, abide by the tree bylaw and the policies and procedures that are in it as best we can at all times.
So you try your best to preserve the tree.
That would be our first goal. That's correct.
Thank you. Okay, great. Thanks.
Thank you. Are there any members of committee that wanted to have a second round? Councillor Davis.
Do we keep, I know a lot of the analysis here has to do with record keeping and systems to monitor all of these things. I know at a previous meeting I asked, do we keep records as part of our ongoing objective of increasing the tree canopy to by 40%? 40 now? Do we keep to 40%? Do we keep records now of trees that are removed through the development process? Because at that time I was told
through the chair. I mean, if we keep records, certainly the records that we currently keep, as noted in the audit, are very manual and relying on an old system. When we implement the new system, the enterprise work management system, which is a new work order management system that will also be a permit issuance system for us, we will be able to have much better data and track more consistently over time the types of things that you're referring to. The processes around gathering that data won't be manual, and there'll be a much more automated approach to how we can get that information and then connect it to the tree canopy work that we do every few years to test where we're moving on the tree canopy.
Right, because I know we record what we plant, but there doesn't seem to be a systematic way of reporting what was removed overall. Did I get I still don't understand the answer to Councillor McMahon's question and the audit. If you remove a diseased or dying tree, you do not have to replace it?
So through the chair, it's not actually that's part of the bylaw. Part of the tree protection bylaw. It's not necessarily an item that's been reviewed in this audit. But as Jason noted, the reason that you don't have to replace a diseased, dying, or dangerous tree is that in terms of the bylaw and the goals that we have, the removal of that tree will actually advance our tree canopy goals by either removing an infective tree, the possibility of infecting other trees, or removing a dangerous tree that could do damage both to property or to another tree. So, the approach and the thinking behind that is we don't want to deter homeowners from doing the right types of maintenance on trees, which in some cases includes removing a dead tree at a cost to the homeowner. And there is a cost associated with that that we don't want to deter the homeowner from pursuing. I should say that the city does have a tree planting program that will provide homeowners with replacement trees if they choose to replace that tree, so it would be at no cost to the homeowner.
The program that plants private trees is done through Leaf.
That's correct.
It's not done through the city. Okay.
It's funded through the city.
All right. Is there a chance we can well, there is a chance, obviously. I think we should review that policy. Thanks.
Are there any other questions from the committee members? Seeing none, Councillor McMahon, you had indicated a desire to speak. The floor is yours.
Thank you. So I just want to thank staff for this interesting report and very thorough recommendations, and glad everyone's on board to follow them and look at them. It's one of the number one things next to cars that we hear from is trees, and you know, it's just, they're so valuable to our city, and we all know why. I won't get into those, all the reasons for the benefits of a tree, but it's just very frustrating, especially with construction and around our trees, and liberties that some builders, developers take with the trees, homeowners. And you know, when they're gone, they're gone. And we've already had our problems with the Dutch elm disease and then the emerald ash borer beetle, and we're hearing about a disease called oak wilt that's in the States right now, and that could take our oaks. And so we all need to be super mindful. And I know forestry, it's a lot of work. And they can't just whip a bylaw officer out right away when someone is taking down a tree illegally. And people do in this town, unfortunately, take liberties. So I think I'm glad we're doing this report now. And unfortunately, I won't be here for the other report on maintenance and planting unless I'm on the other side. But I'm just glad we have this report. Thanks.
Thank you. Councillor Carmichael Greb.
Thank you. I'm just going to speak quickly, and I want to thank the auditor for this report. It brings up a lot of the issues that I've dealt with in my ward. Some of the experiences that I've gone through are, we had a house on one street that had a black walnut tree. Tree is enormous. The walnuts are falling from 80, 90, 100 feet, caused damage to landscaping of the neighbor's house, broke glass tables, put holes in a sandbox where kids were playing. The kids weren't there, thankfully. I had another tree that was approved by community council to be taken down. It was a very large spruce tree. The resident's father had planted it 60 years ago when he built the house 70 years ago. At that time, it was a small little sapling, planted it too close to the house, and the tree is now enormous. In one of the windstorms a few weekends ago, it was denied at council. So it went through community council, denied at council. At one of the windstorms a few weeks ago, to full council. And not all councillors are at community council to hear the stories of why community council approved removal of a tree. There are very personal stories about why a resident would like to have a tree down, whether it's a walnut tree and their child has a severe nut allergy and they have a doctor's note saying, take the tree down, or the tree has already caused a lot of damage. That's a whole other change, but I think that is why a lot of residents just decide to take a tree down, and they'll talk to their neighbors, and the neighbors say, just take it down. We won't report you. Just take it down because there's no penalty. So I think there is still work to be done, but I want to thank the auditor for this report.
Thank you. Councillor Hart, you had mentioned that you'd like to.
Yes, I wasn't going to speak, but now I feel compelled to. I just want to draw everybody's attention to page 10 of the Auditor General's report, where it lists a number of cities and references that Toronto's permit requirements appear to be the most comprehensive and stringent, which to me is a great news story in the Auditor General's report. You know, we have these issues with trees coming down that we've reported through Community Council, but I can tell you in the last windstorm, in the area that I live in the city, there was all kinds of huge trees down through people's houses, roots out of the ground. They're all healthy trees. Anyone could have applied for an application for them to take them down. The application would have been denied, and rightfully so, but the wind took down the tree. Enough wind will take down any tree, and I think we have to keep that in mind, that, you know, trees, can they be dangerous? Absolutely, but we have to preserve the healthy trees that we have. Within the report, there was some talk about, you know, when people disregard bylaws and go through processes and don't get permits and illegally remove trees, they should go back and go through a process or at least be charged that amount. I would have a little bit of a different spin on that. My view is if they blatantly disregard our bylaws, whether it's trees or anything else, we take those folks to prosecutions. Completely different way to handle it, way better message, and potentially a lot more money involved. You know, we had one in the ward that I represent that was tens of thousands of dollars when it went through prosecutions. That would be my spin on it if you want to send out a message. It's not put them through a process that may be denied anyway, that they avoided. When you avoid a process in this city, pay the consequences.
Thank you. Councillor Davis.
We didn't really ask questions, or I haven't heard anyone comment on the accumulation of the unclaimed fees. I do hope when the report comes back with recommendations from Finance that somehow those funds get dedicated to Forestry, and that those funds are allocated to achieving our overall objectives of expanding the tree canopy. The second comment I want to make, though, is once again, this is a department that clearly does need additional staffing if it's going to be able to achieve and deliver on the recommendations that are in the Auditor General's report. And so often we, as council, have goals and objectives, and we approve policies, but we don't agree to provide the resources necessary to achieve the outcomes of those policies. So when we introduced the private tree bylaw, it's very clear we didn't get in place the systems and the staffing to do the level of monitoring that was required, nor have we put in place the training to ensure consistency across the division. And so I hope when the budget comes forward that the councillors around this table will agree that these funds need to be put in the budget if we're going to achieve these objectives. Far too often, these budgets come forward and we simply say, no, we're working this way. We're going to start with a cap on what the tax rate's going to be, and then we'll figure out what we could fit in. And that budget process and people's approach to the budget, I think it's got to change. If this committee approves these recommendations today, they should be voting for a budget that achieves them. And, you know, I think it's the height of hypocrisy to consistently be assessing how our divisions are delivering at the same time we don't provide them the resources to achieve what they're supposed to. So either we say we don't have a tree bylaw, that we don't have these objectives, or we give them the resources they need to do. And that means all new systems. Almost every division is working to put in capital to achieve new systems, to improve greater effectiveness and efficiency and all of the things that we want them to do. But we don't provide them the funding. So I'll certainly be watching with interest, and maybe, as Councillor McMahon says, I'll be sitting over there come budget time to remind all of you about this report. Thank you.
Thank you, Councillor Davis. Anyone else wishing to speak? With that, on the adoption of the recommendations of the report, all of those in favor, that is carried. On to AU 13.12, Engineering and Construction Services Phase 1, Controls over substantial performance and warranty inspection processes should be strengthened. And just as a reminder, we reordered number 11 to the end of the queue. Councillor Davis, you'd held that item. Do you have questions of staff?
I thought there was a presentation. Wasn't there?
No, I don't believe we have a presentation on.
No, there is no
There isn't one.
presentation.
Okay, I thought there was buried in this file. I was quite shocked by this report. Because, you know, we can talk about all these divisions that have small budgets, but this is a massive budget. And we undertake incredible amount of work here. And this identified some serious problems with our inspections for the certification of substantial performance. Well, I want to say thank you to, first, I know I'm asking questions.
You are asking questions?
Yes.
Okay.
The charts, there are charts here that where 70% of the files inspected, and I know this isn't representative, but points out some serious deficiencies in certifying substantial performance and ensuring warranties are met and reviewing that the deficiencies in the end were actually rectified in these contracts. And I know you've put in here, you've got continuous improvement and you're putting in place dashboard notifications, so on. Please tell me specifically and really clearly what steps are being taken to ensure that the deficiencies on these capital projects are getting dealt with in a timely manner, and that what we pay for we actually get.
Through the chair, I think one of the things to acknowledge in terms of the Auditor General's review was, I think, very succinctly, the fundamental issue had been a lack of documentation and proper bookkeeping, if you will. We have the systems in place. I think there are, without question, errors on behalf of staff in terms of failing to make entries into our system. We have an electronic system called a project tracking portal where there's expectations that staff will make entries into the system when they actually do their final inspections. And so, unfortunately, we're going back to 2015 where we had procedures and manuals in place reflective of 2015 that have since been updated. And to your point, we continue to continuous improvement to make changes to that, even to our PTP, our project tracking portal, in terms of its reporting back not only to the project managers, but to the managers and the directors as well. So systems are continuing to improve. But like I said, back in the 2015, so far as the projects that were audited, firmly believe that it was really fundamentally a lack of documentation and record keeping, that staff did not make the appropriate entries into the system.
So you're confident that it was simply there were certificates of contract completion that were granted before projects were even completed within the sample that was taken. Well, there are 3 tables in there that are shocking to me, where 70% of the deficiencies that were identified were not completed. So are you telling me that's not the case? That it's simply a matter of the records weren't there? And how do we know that? How can we be assured? Because I've certainly seen lots of examples of deficiencies that have not been rectified in contracts.
Well, through the chair, all I can comment on is that there is a 2-year warranty period, and staff, from a due diligence standpoint, do follow up in ensuring that the work has been completed. If there are some specific examples, I would welcome those examples so that we can follow up. Staff do at the substantial completion stage a list of deficiencies, and again, what the auditor found is that they weren't properly documented. It's one of the things that we have followed up with our staff.
Maybe I'll ask the Auditor General. If they weren't properly documented, how do we know they actually were completed, or the deficiencies were corrected, the appropriate payments were made, and so on?
So thank you, and through you, Chair. We couldn't find the documentation to substantiate that all the controls, all the work had been, the deficiencies had been rectified. What I can can say, though, is the policies were in place. The organization is generally tight. We couldn't find the documentation to support these, so there was a lack of compliance with the documentation. But to say whether the deficiencies were rectified or not, we couldn't find the evidence to say that. So this is a control issue. The head of engineering has said that it's tightened up, and so as we go in for our next phase, we can just monitor to make sure that that's the case. So, you know, when you don't have the documentation and we can't go out and verify on the job, what we do is we look at the whole organization. They do generally have pretty tight policies, so that they have set up the policies. The compliance is what we couldn't determine because the documents weren't there. We're going to go back in. Actually, our next phase, our phase 2, is starting. So we're going to verify that, as the head of engineering has said, that the documentation is there.
I just want to ask a staffing question, if I could. Are there staffing issues as well? What is your vacancy rate in ECS?
Last question.
Through the chair, so yes, it's recognized. It is quite high. We've had challenges in filling some of our senior positions, particularly on the engineering side.
What is your vacancy?
It's roughly in the order of 8 to 10%.
10%.
Yeah.
Okay, thank you, Councillor Davis. Is there anyone else wishing to ask questions on this? All right, anyone wishing to speak? Councillor Davis, thank you.
I don't have a motion, but I hear what the Auditor General is saying, and I'm pleased that you're going back to actually look again at whether or not inspections are being carried out, whether the certification of performance inspections are being done, and the record keeping is being done on that, and whether the deficiencies are being quantified accurately, and whether the deficiencies in the end that are identified are being corrected. Looking at what is before us is very concerning. If 70% of the deficiencies are not being corrected, which is what this appears to say in at least one of the charts, this is a hundreds of millions of dollar budget. And if we're not getting what we're paying for, and we're not inspecting to determine that, or at least documenting to confirm that, then as a councillor, I think we need to be, even though it is tight, a tight department, there needs to be more tightening done so that it can be demonstrated to us that projects are completed in a timely way and to the satisfaction of the city. Thanks.
Thank you, Councillor Davis. Anyone else wishing to speak? Seeing none. All those in favor of adopting the recommendations of AU 13.12? All those in favor? Any opposed? That's carried. Thank you. So we are at AU 13.13. That is review of the Green Lane landfill operations, management of contracts needs improvement. Councillor Hart, you had held that item.
No questions. I just want to speak.
Thank you. Yes, go ahead. No, did anyone else have questions? I don't think so.
Just a point to the Auditor General. I notice on page 2 of your recommendations, recommendation 2, you talk about bulk purchase once again for fuel. I've seen that in other reports of yours, and I've seen that in other reports of the former AG. Do you think we need that? I'm not asking you a question, obviously, I'm speaking. I just would hope that we don't see that recommendation in future reports. I can recall seeing that bulk purchase of fuel at least 3 or 4 times in different reports, and it's unfortunate that you have to keep making the same recommendation over and over again. That's my only point. Otherwise, no.
So I'm going to speak as well, very briefly, and I think, Councillor Hart, you've read my mind. I actually have a motion on that, and I would, I'll say a couple of quick things here. It was refreshing to see the auditor's, her comment somewhere in here was that, her audit finding was that things are actually doing quite well. at Green Lane. And, you know, I appreciate the diligence of the work, and a number of things were brought forward. And there is this little gem in there about bulk fuel purchases that actually transcends the item of just Green Lane, but it talks about, can we as a city leverage the contracts that we have to get a discount on large volumes of fuel and then somehow pass them on to our contractors? And I think that that's a very good thing. And for that reason, I'm going to just adapt one of the recommendations that says, go think about these opportunities and request that the report come back to Government Management Committee so that we can look at that as a committee and as a council. And with that, that's the recommendation. Is there any questions?
I just have a quick question.
Go ahead, Councillor Carmichael-Greb.
Would you see it as a friendly amendment to also refer it to the transformation officer? Because I believe this is one of the things that he is looking at through his procurement review. And he has mentioned the bulk fuel purchase.
I think that would be a totally friendly amendment as long as we don't refer the whole item to the CTO. But if the clerk, are you able to get some words in there that...
It's requesting the general manager and the additional person.
So would it be okay if the City Council requests the General Manager Fleet Services and the Chief Transformation Officer to consult with city divisions? And so on with that. Is that agreeable to you? So with that friendly amendment, all those in favor of the amendment? Any opposed? On the item as amended, all those in favor? That carries. Thank you. We are at AU 13.14. Mindful of time before the break. Information Technology Infrastructure and Asset Management Review, Phase 2, establishing processes for improved due diligence, monitoring and reporting for effective IT projects and asset management. Councillor Hart, I have you down as holding that item.
Just a question of the Auditor General, my usual question. When you look at the response that the city took to the Bellamy inquiry, one of the big issues that was found at that time was the city was buying IT equipment and IT software that they didn't need and didn't use for a number of years. The response from the city manager to the Bellamy inquiry happened in 2005, and many of the recommendations that are in here were addressed in the city manager's response in 2005. So I'm wondering why we've gone from 2005 to 2018 with much of the same recommendations still apparently outstanding.
Thank you, and I think that's a good question for the CIO, who's been in charge since 2013. I think at a high level, though, I think it's partly the way that we have operated in a decentralized manner with each of the divisions, strong divisions, having some control over the purchases of their assets. We found the same thing on the security side, and it didn't provide for a holistic framework and a holistic, I would say, fabric to make sure everything was coordinated. In my security report and in this report, I have made it clear that you need one person in charge to make sure everything is done, and that the divisions, if they have needs, it has to be coordinated through the CIO so that the management is done from a centralized perspective, and we're not overbuying, we're coordinating when we're buying. And so we've made that recommendation on 2 reports for IT. We're now going to go away and let that implement, and I'm hoping going forward it's not going to happen again.
When we responded to Bellamy in 2005, exactly what you just said is what we said we would do.
Mm-hmm.
Thank you. Are there any other questions from the committee members? Seeing none, anyone wishing to speak? Seeing none, I will suggest that we adopt the recommendations of the report. All of those in favor? That is carried. We have 8 minutes before lunch. I've got AU 13.17, which is also an IT-related matter. Improvement needed in managing the city's wireless telecommunications contracts. Just before we start, Councillor Hart, you had some questions on this. Do you think we can get this through before, or do we need to extend to at least finish the item, just so we can let the item?
Speak to it.
Okay, that would be great.
A minute.
The floor is yours.
Again, ditto to the previous reports. The AG's report in June of 2014 addressed most of the concerns that you've addressed once again. So, again, we're seeing another report that's I won't say it's repetitive, but the same themes and to be addressed 4 years later. So just my comment, something that staff should be aware of, which I'm sure they are.
Thank you. With that, anyone else wishing to speak? Seeing none. All those in favor of adopting the recommendations of the report? All in favor? Those opposed? That's carried. AU 13.19, Councillor Matlow, we've got about 6 minutes to go. Do you think you can get that covered and you've got that item held, or do you want to? Do you suggest we have a break?
Maybe I can get through my questions and then we'll see if I speak now or later.
Okay, that's perfect. Okay, I don't want to interrupt your rhythm with the break, but if you're good with that.
I'm good with just going the way it goes.
All right. So AU 19, Councillor Matlow, you've got questions.
I recall back under the former AG, this was a priority of his, and certainly Councillor McMahon and I would move motions to support this intent as well, to gain just a better ability for your office to be able to successfully audit the kind of quasi-external agencies, and then also to make sure that their processes are better in line with ours, and there isn't as much repetition of services, or even sometimes having, a kind of an integrated auditing function, et cetera. How has that gone in general since back in the days when, AG Griffiths was just kind of pushing for it as we were, and today? Have we made progress?
So through you, Chair, I believe you're speaking about the shared services.
Yes.
Yeah. So so we haven't done a specific shared service update except for the report that came when I first came to the chair to be Auditor General. There was an update on a number of studies that were done across the city. We are now embarking on individual reviews. One is fleet, for example. So we're going to review fleet at the city and be looking at that more broadly. So we're looking at the fleet work right now with Lloyd Barley's team. We also have some work going on in fire at the same time. We're going to do a little bit of work into EMS. So we're going to go section by section, but the work we're doing, I think, contributes to the citywide coordination. So a specific project on shared services has not moved forward, but we are looking at each of the individual areas.
Looking at these, just this small number of agencies and corporations, just to cite your own comment here, as of December 31st, 2016, there were 10 audit reports to agencies and corporations with 71 outstanding recommendations. Among the 71 recommendations, our review verified that 12 recommendations, 17% have been fully implemented. I ask you again, sort of how are things going with respect to, just whether it be shared services, yes, but also even having them to editorialize, recognize that they are part of a larger body rather than sort of running their own fiefdom.
Thank you very much for the clarity on the question.
Yeah.
I feel that they are implementing where when we bring a report forward, they do take it seriously. If they are not, I'm going to recognize that in the report as part of this follow-up report. What I can say, for example, in calling on TTC, and Dan Wright is here, he's the new CFO for TTC. What I can say is that there's a lot of work happening behind the scenes, and they're not quite there. And we pick up the outstanding recommendations, but some of those have been, they may be new and it might take a bit of time. I watch not only to see if the recommendations have been implemented, but whether they've moved along the continuum at a pace that I feel comfortable with, and I can say that they are doing that. And I don't believe, now, Jane, you were also involved with this project, I don't believe I've seen a corporation where they've ignored or have not implemented. Okay. They're moving it along, yes.
Is it more structural challenges that they're just set up in a different way and they're just trying to figure out how to integrate?
Some of them are big asks, Councillor. For example, Wheel-Trans is a big ask. Even the inventory audit that we have had, we brought forth last year where we estimated a potential of $40 million savings, believe it was per year. They have gone out, they have had their own analysis done, they've confirmed our findings. They're now changing large inventory systems to realize that level of savings. So they are acting diligently, and I do believe that the CFO takes everything seriously for TTC for sure, and for the other corporations.
I have just one other thing that I want to get in before my time is up. Toronto Parking Authority. Like, I recognize Creatio is new, whole new ballgame. TPA though, yes, governance is put under quasi-supervision. But still, retroactively though, why can't there be an immediate audit done of their real estate activities, given the questions that have been raised about more than one?
Thank you, Councillor. We had a real estate audit back in 2015, and then we had an investigation. We did not go in and do the follow-up, cover-off, or verification that real estate recommendations have been implemented, because I have another matter that's actually underway in relation to TPA, and I'll hopefully be reporting out on that to the board in the next month or two, as soon as I can. And
actually, on that matter,
yeah.
You believe that matter is going to be coming to the TPA board, or where is it going in the next month?
The structure is that I report to the TPA board and then through this committee. So it'll be public at the TPA board, I guess, when I report through to the board. So whenever the board meets and the board chair is not here.
Because I was wondering if it was going to be coming to this committee itself. So
yeah, so, Councillor, I have to say that the work has been completed on that project.
Yeah.
I'm simply writing a report. It's going to be a small report. But given the level of volume of reports here and some last-minute work on the fire audit, the volume was so much that we didn't get to finish off that piece, but it's very close.
Will a portion of it be public?
Yes, it will.
Thank you. All right, time now is 12:30. We will recess till 1:30. Thank you.
Chair, can I give a presentation for a retirement?
Yeah.
Just go ahead.
So, you want to do this now or after lunch?
After. Okay, maybe after lunch.
Yeah,